For decades, it's been our way of doing business, but the world is moving faster. It's time to embrace the speed of the future. The Bank of Zambia is officially phasing out checks. Take note of these important dates. The last day to deposit checks at your bank is Wednesday, 24th June 2026. By Friday, 26th June 2026, checks will officially cease to be a payment instrument in Zambia. Switch to faster, safer, and more convenient ways to pay. Use mobile money, cards, or electronic funds transfers. The future of Zambia is digital. For more information, visit www.boz.zm. Bank of Zambia, protecting your financial future.
Hello and welcome to this live broadcast. We coming to you from the headquarters of the Bank of Zambia. It is that time where we pay attention to this particular broadcast where the Bank of Zambia, through its Monetary Policy Committee, will be making that monetary policy rate announcement. As you know, this is done through its chairman, the committee's chairperson, the bank governor, Dr. Denny Kalialia. The last announcement put the rate at 13.5%, and it is going to be a matter of interest as to whether the bank will be maintaining that rate or not. Some economists are saying the bank could do well to just maintain it at 13.5%. But we'll hear factors and fundamentals that the bank governor will be citing for the decision that will be made this particular morning. So much can be looked back at as to see what could influence the governor and his team's decision. You're looking at a stable inflation rate. In fact, the target has always been between 6 to 8% target. As we speak, as it recorded as at April last month, it stood at 6.8%, the lowest since 2018. And as you know, the bank's main interest is economic stability, of course, stability in as far as the inflation rate is concerned. You could call the committee the inflation rate committee. That is very important for the bank. But there are other factors that could be put into consideration. The geopolitics, which had an effect on the prices of petrol and diesel. The government of the Republic of Zambia putting a waiver to try and make sure that there isn't too much hurt for the consumer and businesses by suspending excess duty and VAT on petrol and diesel. Will that have a telling effect this particular morning? There's slowness in as far as food prices are concerned, and that could also be a telling effect, but the bank governor will be more suited to talk about that. There's also a press conference about the journalists, and they'll be asking and firing questions at the governor and his team. So for now, let me take you inside because our MC there, Besnat Mwanza, is on standby to take us through the rest of the proceedings. She is Assistant Director Communications here at the bank.
Thank you very much, Franklin. May we stand for the national anthem?
And sing of Zambia, proud and free, land of wealth and joy in unity, victors in the struggle for the right. We want freedom's fight, oh, and strong and free. Africa is our own motherland, fashioned with and blessed by those who blend. Let us all our people join as one, brother
may remain standing for a prayer by Mrs. Wezi Sikabanga.
Let us pray. My God and my Father, we want to thank you for today. Thank you for the breath of life, and we thank you for bringing us here in this fashion. We commit this meeting before your hands, and we ask that you will guide and you will lead through your great power and your great name. In the mighty name of Jesus Christ, we pray. Amen.
Thank you very much, Wezi. We may be seated. The Governor, the Deputy Governors, Chief Operations Officer, members of the Monetary Policy Committee, directors here present, staff from the Bank of Zambia, members of the press, ladies and gentlemen, good morning. I welcome you to the second Monetary Policy Committee press briefing for the year, where the Governor will be announcing the decision of the committee, which held its meeting on Monday and Tuesday. We are coming to you live on ZNBC TV1, Diamond TV, Mwebantu Media, and the Bank of Zambia Facebook page. To you, our online audience, we acknowledge your presence and thank you very much for joining us. Allow me to introduce to you the dignitaries in front of us. We have the Governor, Dr. Denny H. Kalyalia, who is flanked by the two deputies, Deputy Governor in charge of operations, Dr. Francis Chipimo, on his right, and Deputy Governor in charge of administration, Mrs. Reka Chifue Muhango, on his left. Next to Mrs. Muhango, we have Director in charge of research, Dr. Jonathan Chipili. Next to Dr. Chipimo, we have Director in charge of financial stability, Mr. Goodson Kataya. Without wasting much time, I will at this point invite the Governor to address the House. Governor, sir.
Good morning. Let me join Bessie in welcoming you all here and allow me to ride on the protocols that she has laid down. Today, we are sharing the results of our meeting as the Monetary Policy Committee, which is the 12th meeting for the committee. The presentation will follow the usual 8 sections, starting with the decision that the committee made, inflation outturn and outlook, foreign exchange market, gross international reserves, current account, credit developments, economic activity, and then provide a conclusion. At our meeting held 11th to 12th of this month, the Monetary Committee decided to reduce the monetary policy rate by 25 basis points to 13.25%. In arriving at this decision, the committee took into account a number of factors. Chief among those were, first, the expected favorable maize harvest during the current crop marketing season. Secondly, the observed relative stability in the exchange rate of the kwacha against the United States dollars. And thirdly, that the upside risks and uncertainty that is associated with the Middle East conflict warranted a cautious adjustment to the policy rate that maintains an appropriate stance of monetary policy. I think the best interpretation of that is that given where inflation is, even with this 25 basis points reduction, monetary policy still remains very active and effective. Now, to provide more context to why this was the case, we start out by looking at what the inflation outturn has been, and we observe that inflation has returned to the 6 to 8% target band in the first quarter of this year. Overall inflation has declined to 7.1, or declined rather to 7.1% in March of this year, from 11.2% in December last year. Let me show this on the chart. This on table 1, this is the usual table we provide, but which is a rolling table in the sense that we keep updating it depending on where we are. So the top part of the table provides information on average inflation and the bottom on end period inflation. So if you cast your eyes to the right side of that table, the last column, you see that in the last quarter, overall inflation averaged 8.8%. Food inflation was 9%, and non-food inflation was 6%, giving that overall figure of 8%. When it comes to the end period, at end March, inflation had come down to 7.1%. That's the overall, and the food 7.8%, non-food 5.9%. So the column next to is what shows the figures where these variables were in the last quarter of last year. So as we are crossing the year, we were concerned that our earlier projections may not be borne out, but there it is, inflation did return to the target band. And what we are saying also is that, before I move on to that, is that after the quarter's end, inflation had actually even come down, further down to 6.8%. But what were the key drivers to this? One has to do with the continued base effects in maize grain and related products. I think I did take some time for those of you who have been following this to explain what base effects is. It simply is that when something jumps up in price at one point, as you move on, you are comparing to a lower end, which is lower before that jump. But once you complete the cycle, that is the 12-year cycle, you will now be comparing that end point with that initial high point. Therefore, the gap between the two reduces. That, simply put, that's the base effect. Then the appreciation of the kwacha has also a very significant impact on how inflation behaves. Now, this variable is important to point out that affects inflation at two different points. One, immediate when that change happens, and two, with time, some of those changes, because they take time, that's when they kick in. That's what we refer to as lagged effects. Now, graphically, this is what we are showing. On the left-hand side, the chart there shows the food inflation, and on the right chart, that's non-food inflation. So again, cast your eyes to the last part of each of those charts, and you see those bars getting smaller in the period that we are referring to. So some of the items which are there, you see those that blue, dark blue, I think that has to do with the miscellaneous goods and services. Then you have the gray, which is the bigger one there. That's housing, water, electricity, gas, and the other fuels. That was before, of course, this onset of a round of pressures on food, on fuel. But during that period, this was the case. I was talking to the non-food chart here. To the food chart, there again you see the blue playing a part is a shrunk. Then the other one, the light blue, has even gone into the negative, meaning that the prices of that particular group of goods had actually experienced some reductions. So put together, this is what is informing the changes that we are seeing in inflation. Just a minute, okay, so now, in terms of outlook, the way we present inflation is in three parts. First, we give you the actual movement in inflation, which is the outturn, and then we look at the projections of that inflation over 8 quarters, which is our forecast horizon, and then we look at what are the risks that surround that forecast as we move on. And that's what will inform what decision we take. So what we note is that in terms of the outlook, while the conflict in the Middle East has introduced notable uncertainties, inflation over the forecast horizon is projected to remain well anchored within the 6 to 8% target band. Annual inflation is now projected at 6.8% in 2026 and 6.1% in 2027 before it edges up to 6.6% in the first quarter of 2028. What is significant here also to note is that all these figures place inflation to be within the target band. This outlook is slightly lower than the February projection that we had. So what did we project in February? Look at the chart on the left and then the table on the right. So the table has the numbers which are plotted on that chart. So look at the table. In our February projection, we had projected inflation to average 6.9% in 2026 and 6.3% in 2027. In 2020, we didn't have figures for 2028 because, as you recall, I said the forecast horizon is over 8 quarters. So at the time we are meeting, we could not extend to 2028. Now we are doing so. So if you look at the top part now, this is the May 26 projection. In 2026, we are now projecting 6.8. Compare that to 6.9. And for 2027, it's 6.1. And for the first quarter in 2028, it's 6.8%. So again, that just underscores the point I made earlier, that inflation is projected to remain within the target band. Key factors that support the current outlook are or include recent kwacha and against the dollar exchange rate appreciation, which we'll talk more about that a little later. The anticipated lower maize prices due to another expected favorable harvest. Some of you here who are in the farming business or at least or even do weekend farming, I'm sure you are already sampling, not even sampling now, you are eating some of your produce for this year. So that has an effect on the prices of these commodities on the market. And then Today, we've spent a bit more time on the foreign exchange market. Why? Because I think this is an area which attracts a lot of attention. We get a lot of questions as why is the exchange rate moving the way it is? Is this sustainable? Is it a fluke? All those kinds of questions do pop up. So to try and help you understand where we are coming from or where that movement is coming from, we thought that it would be important we give more information on this subject. So what we are saying is that the kwacha appreciated by 14.8% against the US dollar in the first quarter of 2026. This was on the back of strong inflows from the mining sector and foreign financial institutions, which we'll show you later. So just now, if you cast your eyes to the chart 6, which is on the right, this is what we are tracing here. You will see that the kwacha has been actually appreciating for quite some time now, since the fourth quarter of last year. So we went through the first quarter, it was appreciating. This trend continued in April and even up to May. Of course, there may be some slowdown in that which is expected, but the fact remains that from year to date, the kwacha has been appreciating. Now, when we look at the aspect of which, okay, I've already said that, maybe I should just pass on. So, but as at May 11th, which is on Monday this week, the year-to-date appreciation of the kwacha, as I indicated, had continued, and in figure terms, it had appreciated by 14.53%. Now, we look further on what is happening, not just here in our market, but what is happening elsewhere. This is what this chart is showing, that the appreciation of the kwacha against the dollar is not a localized event. It's something which is happening in other jurisdictions. It's a question of magnitude, depending on the local conditions and the factors which are behind that. But generally, the dollar also was experiencing pressure in other markets. That's what the chart on the left is showing, that if you look at that, you see the US dollar, and then the other currencies. The US dollar is the red line, and then the others is the blue line. So you see that the dollar has been losing when it is going up that way. Then now, focusing on individual currencies of other countries as they relate to the dollar, this is what the chart on the right is depicting. We see that the kwacha has been at the top of that chart for the first quarter of this year. That in nominal terms, it had appreciated by 13.4%. That's what that is showing. Then you see others, the the Brazilian real, the Argentine peso, the Nigerian naira, then you have the Chinese yuan, the Mexican peso, then the Angolan kwanza was just on spot. But then below that, you see depreciation of other currencies. So this should give you some good understanding, or at least an appreciation of what is going on here, that there are really changes which are happening to our currency. Further, we see that the mining sector has continued to be the major supplier of foreign exchange to the market. In fact, this time around, we see that the mining are not only contributing a lot to the taxes in foreign currency, but even supply to the market. So what you observe on this chart, look at the last column, the bar rather, at the end of that chart, you see that the green part, this is the part which is supplied directly to the market. The blue part is showing the amount that is remitted or which we purchase from the mines by way of mineral taxes and other taxes. Mineral taxes generally, they are made up of royalties and other taxes. So what you see, this is like a step ladder, going save for Q2 2025 when that bar was higher than the next bar, which is Q3 2025. But overall, if you are to draw a trend line, it's an upward trend line that you draw. So overall, what we are saying that these inflows raised a total of $915.7 million from the $759.4 million that was realized in the previous quarter. This is not small amount of money, except that in Zambia sometimes we tend to minimize the importance of these figures. That's almost $1 billion that was realized in one quarter. Now, there are many factors which are behind this, including, of course, increased production and the price of copper, which has been had reached its peak at some point, and it's still quite robust as we speak. Then additional flows were received from financial institutions, a total of $542.3 million, which compares favorably to the $335.6 million in the previous quarter. So that's what this chart on the right is showing. Due to this improved liquidity, net supply increased to $230.2 million compared to $93 million in the previous quarter. Now, what are these financial institutions? These normally come by way of those institutions which come to participate in our government securities here. You recall that up until January this year, there was a cap on their participation in the domestic market here. That cap was at 5%. In short, we were restricting their participation because of the impact that was expected to have on the debt sustainability of the country. And it was also part of the benchmarks under the just concluded ECF extended credit facility arrangement that we are the fund. So following that, the end of that, we had the ability now to make adjustment to that, and we did raise the cap to 23%. And that opened the door for these foreign players to come and take part in our market. So expectedly, that contributed to supply of foreign exchange, which contributed to the appreciation that we are talking about. Secondly, when they do come, they also offer more competition in terms of bidding for government securities in the government securities market. and that saw yield rates on government securities also come down. So we'll talk about that a little later. So the point here to note is that in addition to the flows from the mining sector, foreign financial institutions also brought a sizable amount of foreign exchange into our market. And you see this being reflected in the build-up in the reserves, which I'll come to shortly. Then the other aspect is that because of what was going on by way of improved inflows, it gave us the opportunity also to acquire some dollars from the market, quite apart from getting from the mineral taxes. So during this period, we were a net buyer of $196.94 million, which came about because we could have gotten more, but remember, we are custodians of the exchange rate policy for the country, and therefore we are concerned also on volatility that we may see into the market. So we constantly observe that, and if we see that volatility is beginning to create more problems, we do provide some support to the market. As you see later, it's also important to bear in mind that we have debt service to maintain. We also have critical imports that are needed in the economy, notably fuel. As the prices went up and then there were some challenges, we couldn't just sit by and let that situation deteriorate. So we come in to help the market also function properly. So continuing that discussion, we see that due to the improved liquidity, the interbank foreign exchange market became active. Sometimes there are no trades in the market, but this time around we saw that some pipeline would emerge, but by close of business it clears. But when it doesn't clear, that's when we come in to try and assist the market to clear. But this time around, we have seen flows back and forth. That means selling and buying, which facilitates the functioning of the market. So in this respect, we are saying that there was 396.5 that was traded, which is significantly higher, more than double what had been experienced in the previous quarter. But the conflict in the Middle East escalated, and the demand for foreign exchange naturally rose, which resulted in a build-up in a pipeline. So again, as I said, we had to play a part to clear that pipeline. So as you see later, the reserves which had built to, we had accumulated to 6.5 billion kwacha, which is a historic high for the country. We had to use part of that to meet some of this increased demand, make debt service, and this is the chart on the right shows. So by the end of the quarter, which is in March, we had reserves sitting at $6.2 billion. This is not a small number. It's not a small achievement, because if you look back on our history in this, we have seen times when foreign exchange was literally, well, I wouldn't say non-existent, but it was such a challenge to do certain things, as of course what else can it explain that better than what we had in 2020 when we could not service our foreign debt, so which led to the debt default. Now, we see that during Q1, we also bought additional amount of gold, or in particular 154.3 kilograms, with a purchase value of $25.4 million. With this purchase, our total holdings of gold have reached 3.38. Let me read that again. 3,380.78 kgs. I think when I was saying 3 point, it was weight like almost 3.4 tons of gold. But in the more precise terms, it's 3,380.78 kilograms. This has a market value of $500.9 million. So this also is helped by the price of gold, which has been very high. You saw at some point these were tagging along with the gold reaching record high, copper also reaching record high. So to the extent that we have gold, that is a benefit to the country, that the amount that we have rises in value. So the current price, or as at May 12th, the price of gold averaged $688.53 per ounce. Per ounce, not per kg. So you can see that's why people are rushing when they hear there's gold here, because if you get an ounce and it's refined, that's the price that you get. But we have to do it in an orderly fashion, otherwise you may not even realize that value. Then the current account, this is now measuring how we are faring vis-a-vis the external sector. The current account balance, which was in deficit, shifted to surplus. So for the quarter, it moved to a surplus of $0.4 billion from a deficit of $0.6 billion the previous quarter. Now, this number changes, so from time to time, because we do surveys every quarter, so don't be surprised if when we come back we say that this has moved even maybe higher, because so far the terms of trade are in our favor. By that we mean that when we look at the price of export commodities and the price of import commodities, here the proxy is looking at the price of copper vis-a-vis the price of crude oil. You find that even though the crude oil prices has gone up, the price of copper still dominates, which means that on a net basis, the terms of trade are positive. So we are hoping that that continues to be the case, in which case our external sector will be much, much healthy. The turnaround here was due to net exports and the lower payments for transportation services. Credit developments. Now we look at, was there credit in the market? Yes, there was credit, except that the growth had reduced quite markedly. Overall domestic credit grew to 7.5% in March from 14.4% in December. And when we look at private sector credit, growth also came down to 8.1% from 15.7%, which in this case reflected mainly the valuation effects, that is reflecting the appreciation of the kwacha, which means that when you translate that into dollar terms, that in kwacha terms rather, the movement was reduced because the kwacha had appreciated. But if we are to go to real terms, with the inflation coming down, it will reflect that it didn't reduce as much as is reflected in nominal terms. Public credit also slowed down to 6.6% from 13.4%, mainly due to a drop in the contribution of loans and advances to the public sector, mostly attributed to the liquidity management operation which the government conducted in 2025. That's an area where the government retired some of the maturing papers, and that obviously gave rise to that reduction. So the chart on the right gives that in graphic terms. Then turning to the government securities market, the total outstanding government securities stood at 270.2 billion kwacha at end March. Non-resident investors, remember I talked about the inflows, they increased their holdings of government securities by 12.5 billion kwacha to 78.3 billion kwacha, which represented 28.9% of the total outstanding stock of government securities. This is shown in the chart on the right. As I mentioned, the upward adjustment of the limit on participation of non-resident investors in the primary market to 23% from 5% in January boosted the demand by non-resident investors. It's also important to point out, though it's not in the chart here, the participation of non-residents was tilted in the longer dated instruments. What do we mean by that? The longer dated instruments, the longest we have is the 15-year bond. Then you have the 10, 5, 7, 3, and 2 being the shortest in the bonds category. So many of these, they come to play in the longer dated instruments. That's very, very important because it means that they are betting that the future will be much brighter. So that's important for us as economic managers to bear in mind. Economic activity. Private sector business conditions remained favorable in the first quarter of this year, as reflected in the Stanbic Bank Zambia Purchasing Managers Index, which averaged 50.3. Now, you see that dip in February, but it was more than compensated for in March. The thing is that a measure below the 50 line there shows that things are not as good. But if it is above, and that's why we color it green too, is that there's some good economic activity. So that's what that chart is showing. Additionally, we see that consistent with the Stanbic Bank Zambia PMI, businesses that participate in the bank's May 2026 quarterly survey of business opinions and expectations also reported improved business conditions year on year. This is shown in this spider chart on the right. Now, you might say, well, that chart is take the continuous blue line. That's what it reflects what was for Q1. But in Q4 rather, of 2025, it was that red, which is enveloping almost the entire blue line. But the key point to note here is that the dotted middle line there, more or less the second from the middle, is what shows you the average. So when you look at it from that way, you see that that continuous blue, which is for the Q1, is outside that chart. So from that perspective, it shows that there was a favorable activity in the economy. This was mainly based on improved electricity supply, the decline in inflation referred to earlier, the stability in the exchange rate also that I did refer to, which lowered the production costs. So when you have inflation coming down, you have the exchange rate also appreciating, it does bring down the foreign denominated costs of production. However, on a quarterly basis, business conditions weakened, largely reflecting reduced demand due to seasonal factors, notably construction. During the rain season, you don't see much of that. So now is the season for construction, mining, especially for open pit mines. That's not a very active period because of the rains. Then you have tourism. Also, tourism is affected by the rain season. Those of you who go to game parks, you will find that there are not many people during this period because some of the places are inaccessible or the grass is too high. So the season now is opening. Agriculture sectors too, this was the time of cropping. Now, as I said earlier, this is the time we are harvesting those who planted. Continuing with the economic activity, medium-term prospects remain resilient despite possible negative spillovers from the conflict in the Middle East. The prayer for everybody is that this war comes to an end because it is really wreaking havoc to virtually every economy, especially except those who have high reserves of oil. But there's an aspect also which affects the agriculture, which is the fertilizers, because they are produced from petroleum. So that is something which we are all praying could come to an end. But on the upside, we see that agriculture is well positioned. The energy sector, a lot of investment has gone into electricity generation. So is the mining sector. So these, in time, should begin to provide the returns for which they are intended. So overall, what we are showing in chart 17 is that growth is looking up. We suffered a bit of a setback in 2025 when growth outturn, or the estimated growth outturn, reduced to 3.8%. But going forward, we believe that the conditions are quite conducive to a higher level of growth. Besides, this is the mantra for the government now: growth and more growth and inclusive growth. So all policies, or the key policies, would have to be geared towards realizing that objective. To conclude, at our May 11 to 12 meeting, the Monetary Policy Committee decided to reduce the monetary policy rate by 25 basis points to 13.25%. We arrived at this decision by taking into account a number of factors, but chief among them was one, the expected favorable maize harvest during the current crop marketing season. Two, the observed relative stability in the exchange rate of the kwacha against the US dollar. And thirdly, that the upside risks and uncertainty associated with the Middle East conflict warranted a cautious adjustment to the policy rate that maintains an appropriate stance of monetary policy. Thank you and God bless.
Thank you very much, Governor, for that presentation. So there you have it. The monetary policy rate has been reduced by 25 basis points to 13.25%. We are now going to have a question and answer session. Please, let's be brief and to the point so that we allow as many questions as possible and we give chance to many of you. As always, please, when you ask, before you ask your question, state your name, the media institution that you represent, then you can proceed to ask. So those that have got a question, I will request that you walk to the banner. There's a duct tape marked box. I encourage you to stand within that box before you ask your question. Who will be the first taker?
Good morning. Thank you very much, Governor. Thank you, team. My name is Munyumba Mutwale. I'm from the Business Telegraph, or the Market Brain. I'm looking at some of the data that also came out from the Financial Stability Report. We saw that this year we're expecting a much larger chunk of maturities, especially non-resident maturities, to start to come about. And also just looking at, obviously, the outlook of where we're going and a lot of the work that's being done in getting a lot more non-resident investors to participate. We're looking also at, is the activity that we're seeing able to offset this? A lot of the maturities, is it just holding the line, or are we expecting any further push down? And in addition to this, we've also seen now a little bit of pressure that the recent risks have brought in. The government obviously needs a little bit more money, a supplementary budget. And I think it was mentioned about 7.5 billion. Will that also now have an impact on rates going forward, especially on the bond market? Are we seeing the maturities versus the government's demand for credit playing out on the market? Thank you.
Thank you, Munyumba. Do we have anyone?
Good afternoon, Governor. My name is Justin Perry from Zambian Business Times newspaper. So in your presentation, you mentioned that the kwacha appreciated by 14.8%, and that was largely driven by inflows from the mining sector. So my question is, considering that we've seen an increase in fuel prices, which affects all the sectors, including the mining sector, are we going to see the kwacha continuing on the appreciation, maybe further to 15 or 14 per US dollars? Then my other question is, recently the government announced the supplementary budget estimates of 26.3 billion. And my question is that going to have any impact on some of the achievement that you've achieved so far as a central bank? Thank you.
Anyone else before I invite the governor to respond?
Good afternoon, Governor. My name is Taindeo from Zambian Business Times newspaper. You've reported about 500 million USD, in terms of gold purchases. This is from the time you started purchasing gold, I think in 2020. I wanted to find out, are you happy with what you've achieved so far, looking at gold mining activities that are happening in the country? Thank you.
Thank you. Governor, you may take those questions.
Thank you very much, based on the colleagues who have asked the questions. Munyumbwa, yes, the maturities are quite large that we see. I think this is something which we are factoring in by also raising the cap so that we get more of new money to roll over. So this was one of our key concerns when we had that cap of 5%, because it created a challenge for rollover. So in the auctions that took place soon after the raising of that did help to raise some money, but obviously the government needs are always quite larger than what you raise. So there has to be some split between what you use on current and what can be used for that. So it was in preparation for that. But I'll ask DGO here to shed more light also on the same. But it's a trade-off which we see here. We can't guarantee that prices will always come down. But what is clear from what has been happening is that the direction of change has been downward. Why? It's not so much in just the coming into our market of foreign players, but also the way we are managing our own affairs. When there is fiscal consolidation, fiscal discipline, it helps to lower the cost of borrowing by the government, because then you become more discerning on what you take. Cost becomes quite an important consideration. So these are some of the finer points where you have to manage your resources, your demand according to the resources you have had. And that's what has been happening in a number of areas. When the government does not fund certain things, it's because they don't have that money. So it is a very taxing matter, but that's what it is, that you have to allocate resources into areas that you deem to be critically important. There are some areas which are obviously ring-fenced or protected, but other areas you kind of exercise judgment whether it can be met now or it can be met later. But all this is taken into account as we are making all these projections to see that things are moving in an orderly way. But pressures do, from time to time, come and may nudge you off that trajectory that you have. But perhaps DGO, since he oversees this space, can shed more light. DGO.
Thank you, Governor. I think really from what we see, we expect to be able to manage the maturities on government securities. I think, if I'm not correct, the initial budget was around 21 billion or something, which was meant to be raised. We think that we'll be able to manage that, including the additional requirements under the supplementary budget. I think you are probably referring perhaps to the fact that in the more recent bond auctions there was not the uptake which we had expected. I think we need to keep the perspective that in the second quarter the government has also introduced changes in the government bond framework, the introduction of benchmark bonds, the reduction of the number of auctions on government bonds from 3 to 2 in the quarter, and then changing the sizes of the auctions. We expect it will probably take a bit of time for the market to adjust to what we're trying to do, the benchmark bonds and so on. And our team keep a very active engagement both with the Ministry of Finance, but also with the market in basically trying to educate the public about what we're trying to do. So on that, I think that's what I would say, Governor.
Thank you very much. Jason, the appreciation of the Kwacha, will it continue? This is a very difficult question to answer for a central bank. Why? Because we don't forecast the exchange rate. You see, we went to great length to share with you the underlying factors to the movement in the exchange rate that you see. So I think the question should be, will those underlying factors continue to be what they are, or they'll even improve? That's what will give rise to a stable exchange rate. If you just focused on the exchange rate on its own, you always get it wrong, because it is also affected not just by the supply and demand, it's also affected by, people may say, a mood, which is what we refer to as sentiments. If people just decide, they don't want to come here no matter what you do, they vote with their feet. By that, it means that they divest and move on. So our job is to try as much as possible to maintain conducive environment. These issues of managing inflation to lower level to within our target is an important indicator. The budget also remaining on the track is an important indicator. And above all, export earnings have to increase. That's a sure way of earning foreign exchange. Because you don't just get foreign exchange for its own sake. It's when you want to buy from outside. That's when you run to that to use. So we have seen non-traditional exports, quite apart from copper, also increasing. So the expectation is that more players should come, even yourselves, those of you who can. There are all these areas where people are talking of avocado has, they are talking of chili, they are talking of beef exports. All these are non-traditional exports. So if we beef up that will help to increase the flows of foreign exchange. We have also improved the tracking of export proceeds through the export tracking framework that we introduced. It's now over 2 years since we introduced that, and it has brought out very important information as to who is exporting, because you may have all these people who are saying that, but are they in the database? This is where also smart invoice comes in. So all these are mechanisms to try and rake in as much as we are due. Because in the past, what used to happen is that someone says they are exporting something, and we are happy that they're exporting without really following up. Did that money come here? Did they earn it? And so on. Until we start hearing stories, people will tell you, no, me, I imported from Zambia, I imported so much, but here the export figure is low. So this is one of the things that we are constantly improving upon. And this year, we are also going to roll out the import tracking framework. Right now, it has been export, and we started on the services, but we want to have an all-round so that we can take account of what is happening in our economy. You may have maybe 1,000 of players in the mining sector, but how many of those actually step forward to pay their dues? So what you should look at is really the underlying factors to give you a sense, will this continue to be the case? That will what will give you. But if you focus on the rate itself, it won't tell you much. And I don't think it's our target. It has never been to target an exchange rate that, now we must move, it must be 14. It's because it's an exchange rate is a double-edged sword. You see, you as a consumer, you may be happy that you are getting the dollar at 14 kwacha, which you said. But remember, there's an exporter there who earned that dollar, who has also obligations. So if that reduces, would you think would they want to produce more? They may not be able to do and compete. Then there's also the aspect of other players outside the country who may take advantage of that and start bringing cheaper imports. And then you close shop to the domestic companies. Remember too, there's this increasing the local content. That's very important policy that the government has pronounced, because you can also conserve foreign exchange by producing what you were previously importing. That's the import substitution arrangement that is talked about. So there are all these things that go into this matter, rather than just looking at where it sits together. If the US policies tighten, even if we are doing what we are doing here, then it means that people who are looking at us, it says, well, you are offering, which was the question, as the yields are high, you think that 14% is high, when they think is, no, this is not as good an economy as the US economy. Remember, we are comparing, and it's not even the orange with the apples. We are talking of an economy which has over $17 trillion as GDP. Just look at even the budget for the military now they are putting forward, 1.5 trillion. Imagine if that came here, what it would do. But our GDP is just about $40 billion. So these are some of the things that we look at, but look at the underlying. We be an exporter, then we can assure ourselves sufficient supply of foreign exchange. And you won't even worry about that anymore. I hope that answers your question. Then the supplementary budget, won't it have adverse impact? Change, my dear, life it moves. You can't hold the progress because you want to preserve what you have achieved. That's not a good way of looking at life. This is done in the context of addressing certain challenges that have arisen. Because if they are not addressed, those two will have an adverse effect on what you thought you would benefit. So it's a balancing act. It's what we call trade-offs that have to be done. But this was taken into account, like Dijo was saying, all this is taken into account when we are making these projections. We shock the models that we use to see if this was, where would it be? So those projections that we do, they are not done lightly. We take all these things and then we say, okay, what are the risks to this? If you exceed that, then that's what becomes a problem. You see, a deficit or supplementary budget on its own it's not a problem. But if you are going to spend that money in things that you didn't plan, things which do not add value, that's where the problem comes. Even at a personal level, if you get money and because you have had a salary raise, then you go on a binge buying things you don't need, you'll find that even though you had a lot of money, your quality of life does not change for your family. So these are some of the things that we have to balance. So the supplementary budget is in the context of addressing the overall economic system for the country. Then the gold purchases. Now, if you say, are you happy what you have bought? Yes, we are happy. But would we have liked to get more? Yes, of course. But we have to be realistic that there are constraints within which this operates. So far, it's not because we didn't want to buy, it's because we cannot find that we want to buy. So it's that relationship that we have to manage, stand there. So we are happy where we are, 3.3 tons, almost 0.4 tons. I think you have heard our neighbors also there. Yesterday they were showing what they have achieved, 4 point something. So we are not far behind, but obviously that's not the idea. The idea is for our own economy to get as much, because this gold is coming from Zambia. So we want to get more of that so that we also benefit as a country from that natural endowment that God gave us. So I hope that answers your question. Thank you.
Thank you very much, Governor. So we are going to take the last two, and the two will come from our online audience. I note that there's no one with an appetite here. Munyumba? No, let me ask this first. So, Governor, we have a question from Mufingwa Ngambi. On the business conditions and growth, what measures is the bank taking to support private sector credit growth while maintaining price stability? Longo Simumba is asking, is the current method of measuring inflation reflective of today's data? And are its weights reflective of these two? We still use a base year of 2010. Is there a consideration to have this updated? Munyumba, if your question is brief, fine.
Hello. Thank you once again. I'll be brief on this one. The other thing that we had also seen is that in the World Bank Index, there was a 61% year-over-year spike in fertilizer prices. And obviously we have been working on fertilizer production as a country. So we wanted to get the central bank's view. Are we still vulnerable when it's time for purchasing season, or are we actually currently even weathering this spike in fertilizer pricing? Because the last time it did have quite an intense impact in the food prices.
Thank you. Governor, you may respond. There's another one.
Good morning, everyone, and good morning, Governor, and the rest of the panel. I would like to find out from...
Please give us your name, where you're coming from.
Sorry, my name is Titiwe Mwemba, and I'm from Live Radio. I would like to find out how much the central bank collected from the old currency, and looking at the recent public caution that the bank issued concerning if there are any members of the public that are still tendering old currency. Does that mean that there is still a huge sum of money out there in old currency? Thank you.
Thank you very much. We are done now. Governor, you may respond.
Thank you very much once again. The online question, first, Mufingwe. Yes, we are. You see, one of the key things to remember about the role of the central bank, our primary objective or mandate is price and financial system stability. That's why we are franked between the deputy governor here, the director financial stability here. He looks at the director research here on monetary policy. The two must talk to each other. But more importantly, if we don't play our role effectively to get inflation, to get the financial system stable, the environment for private sector to participate, or even all these things that you are saying, will be very difficult. So that's one thing which is taken for granted, that when you have financial stability, it's like nobody's doing anything. It's like at home, you see, if you each time you open the tap, you get water. Then one day you come, you try to open the tap, nothing comes out. You panic, isn't it? You say, what is going on? Suddenly you want to become a plumber to try and fix that. It's maybe too late for something. So this is the same thing that we are doing here. While we are actively working, is sometimes also I wonder whether we even ask ourselves, for example, we want to go on vacation. You are happy you go to a resort or a restaurant. You don't think that those people there who work there, also, they are just like you. They also want to go on vacation and all that, you know. You even complain now, what is going on here? So these things, that's how life is. But more seriously on the financial side, financial stability is extremely important, because if there is instability, you can't get the things. And this is what we were facing when the debt restructuring, or debt overhang was very severe. Things could not move. The cost of doing business was extremely high. You may say it's still high, but it's coming down. It may not come down to the point that you want it to be, because it's a process. That's one. Two, as an institution, we look at different shocks. So when we had the shock, for example, with the COVID-19, we introduced a special facility of 10 billion kwacha. That sustained livelihoods, that sustained businesses. It's not trivial, it's something which we saw with our own eyes. So that's support that is more direct. But we are not going to be competing with the commercial banks who we regulate. So we do it in a measured way and very clear exit mechanism. Then we had the drought that we were afflicted. That created havoc for electricity, for agriculture. Again, we came up with a special facility, which is the SRF. This has fully been applied now. We had, I think, 8.5 billion against the fund of 5 billion. So there we have to obviously select very carefully those who get the facility. But we do it through financial institutions. So that's another very direct support that the bank has done. Third, we are now doing the SPGI. I think maybe DGO can speak to that. Then we are working also on the housing finance facility. We have some 10 billion which we have put aside. We are working up mechanisms on doing this. So this is something which we are going to roll out. Because when you look around, even just here in Lusaka, many of the buildings that you see here, how many people really got mortgage for those? most likely people, they recognize their own money. I don't know if I was to pour here among those of you who have housing, where did you get a bank loan? Or maybe it was your employer who provided that facility. When colleagues from outside countries where mortgage works well, they get actually very shocked. That you mean you bought this cash? Even vehicles that you drive, you have bought that vehicle. In other places, it's on loan, you know. So these are some of the areas we are working on. We have introduced other facilities, not by way of giving money, but facilitating how business can operate, one of which is collateral. We relaxed the collateral requirements, and we have also collateral registry, where you are supposed to register your collateral so that you can not lose out in an event that the borrower does something. Which reminds me, we have seen actually some, especially from the public sector, people who are trying to jump this scrutiny by going to different players, presenting the same information that no, I'm still worth something to think, because they know that this won't catch, and get money, which in fact is by false pretenses, when they don't have the capacity to repay. These things add up to the cost of doing business, because once the business catches up that this is what is going on, then they tighten the rules, they even may be raising the cost of doing this. So there are many things we are doing, but just these are some of the things, but maybe Tijo can add along with the issue on SPGI.
Thank you, Governor. No, I think you've really covered everything. I mean, the basic issue which remains for us on the SPGI, it's really we were trying to think of an innovative way in which we can work with the financial institutions to offer a guarantee which can support lending, particularly to small businesses, but do it in a way in which it incentivizes the banks to lend, but also it provides other support which small businesses need, market development, market linkages, and offers a lower price. So we're working with that with them, and we think that's something which we should be able to launch very soon. But the bigger issue with credit, I think, is the issue of now the spread between lending rates, especially that inflation is falling. And so real rates are very, very high. Obviously, as Governor has indicated, for us, the main thing is do your job first. Get inflation low, get the exchange rate stable. We've done that now, and God willing, that will remain going forward. So I think we've been having this conversation with commercial banks that we'll now be wanting to get into a conversation, probably bilaterally with each of them, to say, look at where the environment is now. How can we address this issue of the very large spreads which we're seeing commercial banks face? And it's important because when we have done these facilities like TMTRF or even the SRF, when we look at what people say their weighted average cost of funding is, that number comes out a lot lower. And so it also doesn't seem to support the very high spreads which were there. So maybe that's what I would add, Governor.
Now, we are running out of time quickly. The question from the online person there who asked about the base for inflation. I think this is best addressed to Zamstat. We, for very clear reasons, we have a different specialization here. We are not the ones who compile that, because then we'll be conflicted. But Zamstat, I think if you were listening to the town hall, I think they were talking about the GDP generally, but they are also looking at the household survey on the inflation. But there are proxies that they use to try and get a correct position on the prices. So they are not far off. So we direct you there. Then Munyumba, you came back on the fertilizer prices, Well, we are cushioned to some extent. Why? Because the base of fertilizer, a good amount is being produced locally. It's a question of would they be able to meet all the demand. That's where now the wrinkle comes in. For top dressing, again, we don't as yet have local production, but they are expanding their plant to do that. So we can't wait to see that happen. So we may be affected in that respect, that we have to import this. So if it were possible to import now when they exchange, but now it's not just an issue of the cost, but it's also logistics. You know, where if they can't move, it's a different matter. So this is why we are praying that the war must come to an end, because it has these very, very severe implications. Then Ketiwe, odd currency, I think I'll ask the director here to help, but just to say as she prepares herself, that you see the exchange, it was for 1 year, and we went all out to all the provinces, 10 provinces, 116 districts in local languages to alert people that exchange your money. But even after all that, we are unable to collect 97%, but she'll give you more details. But the point I want to make is this. There are 3 categories of people who still hold this money. One group is those who think it could be extended, you know, from previous experience. That group, I think, is a dangerous thing when you are given information that this closes here, but you rely on the fact that no, it will be extended. That's wrong. It's like, you see, you study, I give you this example. It's simple, but it may shed light. It's like you are preparing for an exam. You look at past exam papers, you know, this is good. So you go into the exam, you see a similarity of the question, and you start answering as if it's the old exam paper. You think you'll pass. You are not likely to pass. So this is what some people are telling us. No, I thought because last time they did that. But the instruction was very clear. Then there are those who are genuinely not aware of that. But there are some also taking chances, you know. So, but 1 year, 300 and, in fact, not 365, 366 days were given to say exchange this. But people go on the eve of that, they go to a trader and say, no, can you take my money? But why would the trader take that risk? You know, so these are the challenges we have. Information, and now we are letting people that when that time came, that money is no longer legal tender. In fact, don't try to present it if you have, because that could become an offense. Now you are trying to obtain goods by, that's a theft now, because that's no longer legal tender. So there are all these things, but we continue to engage people to alert to them. So we hope that this also is a lesson for those who think that the thing would be extended, because that's what has been happening. So, Angela.
Thank you, Governor. You've ably answered the question, because 97% is actually excellent performance. So there's only 3% unwithdrawn banknotes, old banknotes, and these have since been demonetized, so they cannot even be used in transactions. That's why, as a central bank, we're aware that there could be some unscrupulous individuals who may try to use the same demonetized banknotes for transactions. So the purpose is really to want the public to be aware of such unscrupulous individuals so that you're not defrauded. Thank you.
Thank you very much, Governor, for those responses. In the interest of time, we have to bring this briefing to a close. Allow me to thank each one of you for taking time to join us. To the production team, Fortress Media, ZNBC Diamond TV, thank you very much. A special gratitude to Mwebantu Media for the feed that you have given us. I will request that we stand for the national anthem even as we bring the briefing to a close.
is our own motherland, fashioned with and blessed by those who blend. Let us, all her people, join as one, brothers under the sun. Oh, one, strong and free. One land and one nation is our cry. Dignity and peace in Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, oh one, strong and free. Praise be to God, praise be, bless our great Zambia, Zambia, Zambia. Remain we stand under the flag of our land. Zambia, praise to thee, oh one, strong and free.
Remain standing and allow the governor and his entourage and members of the Monetary Policy Committee to leave the auditorium. Until next time, thank you very much. Do have a blessed day.